Hello traders, this is Rich Derrick from Tradesight. This is the market preview for this coming session. It's going to be Wednesday, March 27th, 2013. Session we were higher on the day across the board. Yesterday's down day was kind of really more or less just a head fake, and we really didn't have the market internals to really take it down too much lower, as we kind of suspected from what we had seen from the market internals and also the other technicals as well. So what we had today was kind of just a rebound and a recouping of that loss. We actually closed at pretty much a new high in the move here. We're up 10 handles on the S&P side, which was generally more positive than the Nasdaq side all day. The NQs were up 15, and the Dow was up 100 plus. So let's move on to the technicals here and really dig into it. All right, so here's a look at the ES futures. We're still kind of gaining the risk level here from the seeker exhaustion sell signal. It's still in play and still intact, but we just really have to get some kind of an indication that we've changed the short-term trend to the downside, which we have not yet. We only have one close below it, and we did not take that out and activate that signal. So we're still kind of waiting on deck for that. This is really taking a long time now, which kind of makes the signal itself a little bit more suspect. The near-term action, we're still above the 10 EMA. Yesterday they kind of saved it. Intraday closed above the 10 EMA. Today they got a little distance above that. So that keeps the trend short-term positive for now. And it closed below that with a follow-through would indicate that exhaustion warning is now an active sell signal. Yeah, NQ futures, as you can see, were much less impressive on the day. There was relative weakness in the Nasdaq side all session. We did not make a new high close on the move like we did on the ES side, so the relative weakness is persistent. Near-term levels, obviously the 8 ace level, 28.1250, the 10 EMA, and then previous day's close around 27.76, 27.75 is going to be the near-term breakdown level. So inside candle today, which means that once we do resolve this range, we really have to respect that, whichever way it resolves, up or down, and then go with that for the next day's trade. All right, our 10-day trend is still kind of mid-range. It's getting a little bit closer to oversold, but certainly not there by any stretch of the imagination. So that means there's still a little bit of energy in the market to continue this move if the market so chooses before we get either oversold or overbought. All right, here's a look at our cumulative advanced decline lines. On the New York side, we're pushing up in the area of a new high. The Nasdaq side, as you can see, is still relatively weak and has not recorded a new high, and this mover is not really that close to it yet. So the Nasdaq side remains relatively weak. So the participation is really centered around the more conservative, growth-oriented stocks, certainly the dividend-paying ones as well. So keep on that. The one thing that's starting to pop up here is starting to see some signs of exhaustion in the biotechs, which is one of the chief components of the Nasdaq side. We'll take a look at that later. So that'll be one of the things that could really affect this cumulative advanced decline and roll this to the downside. If this cumulative advanced decline starts to roll to the downside, I would think it would probably really precede the rollover in the broad market. So that's something that we're going to be watching next couple days. Okay, our SPX TLT cross is essentially putting on a little bit more growth right now, a little bit more risk on. Right now we're still a little bit below the midpoint of this trend channel, so we're not in any ways overbought as far as the risk on goes right now. We never really got near kind of this sweet spot here to make a fade long on the stock side, but right now we're middling, curling back up to the top for now. All right, so here's a look at the NDX divided by the SPX. It really shows the relative strength of the NDX versus the SPX. Still relatively weak here, still having problems as far as getting some relative strength going for the NDX side, which will probably ultimately wind up holding back the broad market here, even if it does make a push to the upside. With the Nasdaq being so stubborn and so lackluster, it's definitely going to kind of continue this kind of begrudging advance that we've seen in the broad market. All right, here's a look at the OSX versus the oil futures. The oil futures have really been outperforming the oil services stocks. This is one of the things that will really kind of make a cause for concern here if we get up into these old highs here in the oil futures, because right now the oil services stocks have been lagging so very badly. It's essentially a non-confirmation right now of this move to the upside. The oil stocks did move up some today, but they're definitely not seeing the relative strength that the oil futures are. And the best moves in oil are usually preceded by a move in the underlying stocks, and we're just not seeing that right now. Here's our multi-sector daily chart. We saw a turn up in the stocks today. We're starting to see some risk on again. It's a little bit tepid right now, but it's definitely there. And you can see that the XAU is still acting as a source of funds for the rotation into growth type situations. All right, here's a look at the sectors ranked from the best performer to the weakest performers. Best performer on the day was the OSX, but it's still kind of lagging the overall oil futures. Consumers were fairly strong. Utilities, unfortunately, were outperforming the market, which is not what you want to see on a risk on. The BKX was fairly weak relative to the overall market. Certainly, the gold and silver names were the worst performer on the day. But let's get down to it. Take a look at some of the technicals. Just want to point out that we're getting a little bit deep here in the Comer counts on a couple of these. We're up to 11 days up now in the airline index. We're 11 days up in the BTK, and we're also 11 days up now in the Amex Defense Index. Here's a look at the OSX, which was our top performer from the major sectors today on the broad market side. Just nudged back up above the 10 EMA, but the bigger important moving average right now is the 50, which is overhead still. So really have to take that to get back to starting to think about taking a shot at this 8-ace level at 250. If we can take this 50 DMA here, then the 8-ace level will come into play. The MACD is trying to turn up, but it wasn't really particularly oversold and didn't get a lot of distance to kind of charge it with energy for a turn up here. So this is really just more lateral than anything else as far as the momentum goes. Here's a look at the BKX, which is still in the midst of this running correction. That just means that we're just kind of pulling back from this previous high. This would be the swing high in the chart. We pull back here to this key 8-ace level, 56.25. Haven't really been able to lose that. If we do lose that, that's definitely going to turn momentum to the downside. We do have this negative MACD cross, but we really haven't seen a release of energy to the downside today, even though there was some sloppiness in the sector today. BTK is still kind of hanging on by a very thin thread here. It's above the 8-ace level, but the 10 EMA is just beginning to start to roll over. If we lose this, 1750 is going to come into play at 8-ace, and then the next level is going to be this prior high here, about 1699 or 1700, right in that area. Now the XAU was the last lagger on the day, but you can see it did not make a new low. Essentially, just basing sideways down here, just kind of doing nothing. All right, here's a look at the oil futures. So you can see just by the design of the chart, we were just looking at the OSX. The oil futures really just outperformed the OSX, which is not what you really want to see. You want to see the OSX really leading the way. We're not there quite yet. One positive thing for the oil futures themselves here is we do have this cross in the zero line of the MACD. So this is the area where we can really start to gather some upside momentum. We broke above the 50 DMA and got some space above it and pushed quite a bit higher. The next level that's really going to come into place, the 6-ace level in the Murray math, is fairly minor. The next real level that's going to come into play is this green line here, which is our static trend line off of the seeker, which is going to be about 97.50. So keep an eye on 97.50. And taking a look at the gold futures, they're really just a source of funds again. The candle was inside yesterday's day, so really didn't do any technical damage. Really just kind of hovering. Was lower on the day. We still have this potential for a MACD zero line cross, but really have to get above the 50 and the 4-ace level here before we start seeing some real momentum start to kick in. All right, folks. Well, thanks for listening, and as always, this is Rich Derrick for Tradesight. I'll see you again soon.